Happy Friday, everyone. We are here to close out the week. I'm joined by my friend, Mr. House. We got ransomware, we got ETFs, we got Solana pumping like crazy. All that and much more today on Money Never Sleeps. Welcome back, everyone. We appreciate you all being here. For our regulars, thanks again for always supporting us. Just before we start, remember that we are not financial advisors. Nothing we say is financial advice. We are just three guys. Two of them are here today, just talking about the markets, what we think, what we're doing, some of our plays, but we're never able to give you financial advice, make educated guesses and assessments based on your own research. House, it's been a pretty green day, I would say, in TradFi, and we're seeing some green in major areas in crypto, and some other areas are pulling back a little bit. It seems like everything is extremely bullish right now, and especially after yesterday when we saw that massive pump for ETH, right? So that's what's on my mind today. Is there anything that you want to start off with that's keeping your eyes peeled that you think is really interesting that maybe people aren't talking about?
Nah, I mean just same thing as you. I got some token bags pumping of some gaming tokens. But no, yeah, just looking at all the God candles and wondering and watching.
Yeah, I mean, you and I were talking about this recently. Like, this feels like the part where Michael Burry's just his shorts are just hemorrhaging, like just bleeding nonstop, and we're just waiting for what is in the cards. And I genuinely believe, like, 100% confidence in our convictions and everything that we've talked about on the show, that we are in deep shit coming in the future, right? It doesn't. It's unfortunate in the short term, doesn't feel like that. And you can't really necessarily see the big picture unless you zoom out, right? So I think the big thing that we should probably start with is this ETH ETF that Blackrock filed. You see that it's live on the NASDAQ. Obviously, it's pending approval. Whether any of these ETFs do get approved, it seems like a lot of them are getting rumored to be approved, but they're always rumored to be approved at some point, and then they just aren't. So we saw ETH have a really good day yesterday. Today it pulled back a little bit. We're looking at 2090, but it did shoot up north of that. Let me just pull up the chart real quick, and we can talk a little bit about what is going on in the price of ETH, right? I mean, we were seeing resistance around here on this level of 1903. That's where we thought it was going to probably hold a little bit, but clearly broke that, pushed to the upside. I mean, yesterday we hit a height of, what was that, 2131, really nice. And then even today we went a little bit higher, 2136.5. Jweb was made a really good call. He said that we might get that double top, and did a pretty good job of calling that, right? Went right to it, and it's really wild because I mean, the way that this price moved is absolutely insane. I mean, yesterday ETH closed on the day 12.28% up. I mean, these aren't small gains, guys. These are massive gains for an asset that's still got a pretty good market cap despite everything that's happened in crypto in the past 2 years. So it's really interesting to see the price shoot up like this. I don't know necessarily if this is just buy the rumor, sell the news. Maybe retail's FOMOing in a bit here. I think it's unfortunate that we're seeing these price gains shoot up so much in a move so late that's already been up really significant compared to where it was in October. That's just my thoughts on this. But what was your reaction to the price when you saw it shoot up like that?
Yeah, I mean it kind of made sense to me given sentiment. We've seen daily active wallets at a pretty or like I want to say a yearly all-time high or coming back towards where it was in the beginning of the year near February. Sentiment on the timeline has just been we're so back, we're so back, we're so back. Meme coins are still doing well, NFTs are pumping, and God knows why that's happening, why people are putting more money into that right now.
Buying
But
raw.
no, I mean, yeah, everything just seems to be pumping in crypto, right? Solana's up near $50. Avalanche is up from $9 to 14 and a half, $15. Polygon's back up. What's it, 83 cents right now or something like that?
Yeah.
I mean, yeah. So it's one of those things where I didn't necessarily expect we would go this high before we went down further. But no, I mean, I think bigger correction up. We're gonna probably see a big correction down, and the bigger they go, the harder they fall. Yeah, that's just kind of what I'm looking at right now.
Yeah, I absolutely agree with you in that assessment, right? The higher we go in this move up, it's probably going to lead to something a lot deeper. And again, I think that there's a lot of liquidity being pulled in here. To the extent of how much of this is retail, I would say that part of it is definitely retail. I wouldn't say all of it is retail. I think when you see price shoot up that fast, you need a lot of capital to be moving that price real quick. But also when we're seeing a liquid markets, it's really easy to push the price up, right? I mean, just pushing, buying spot and then maybe just moving off the exchange that causes a supply demand issue that could drive the price up. I mean, I would like to look at this on the hourly actually, even for how much it pushed up. You could see that, okay, it shot up roughly around 3.47% on the hourly yesterday. Let's see how this looks on even 5-minute chart. Probably got like one massive, yeah, see, this is what I was anticipating. So this is, shooting up majority of that move in these three or four candles within a 20-minute span, shot up a good amount, and then we just continued from here. A little bit more of trading volume here, obviously going back and forth, trying to find where this price eventually would land. But we can see that it had a really good move up. And when it did pull down, it just bounced right off the 50 moving average. And we've been seeing that the 50 moving average, even on the smaller time frames to the bigger time frames, have been really strong for pushing the support. So yeah, I mean, I think we were kind of anticipating that it's very possible that the price of these coins and these assets can continue to go up. I think for different reasons. I think you and me are probably likely to suspect something more dubious in play, especially with a lot of what's going on with these exchanges. Um, it's really interesting to see how retail is coming into the market too, because I definitely do think that it's starting to be the point where retail feels like, okay, maybe I can buy in a little bit here. And the unfortunate thing is the move has been so significant already. Is this a dangerous place where retail is entering? Is this again perfectly timed where retail needs to be entering for a lot of these big players to be getting?
Yeah, and I think that's part of it, right? Is whether it's retail, more of that pro trader, all the way up to the enterprise and institutional side. If you're waiting for, like we always say, you can't time the market. Everyone kind of lives by that, right? But
Yeah,
if you're waiting for that dip and expecting it kind of for as long as we have, at some point you're probably getting a little bit trigger happy where you want to have some sort of skin in the game, right? And whether or not our suspicions are true, it's if number keeps going up and ultimately that's the trend that can't be broken. You gotta be able to hedge that a little bit, not necessarily throw your whole stable position or liquid position at that and say, okay, this is the time we're going to go all in. But just being safe and DCA a little bit, it's not going to hurt you in the long run,
yeah,
whether number continues to go up or it goes down.
yeah, that's a great point. And you actually reminded me. I wonder how much of this is also shorts covering their positions, right? People are when they short sell, they are telling the exchange to sell, and then they'll buy back at a later date. Well, the price continues to go up, so they're either going to get liquidated, margin called. Something's going to happen where they're just going to lose their entire position. So maybe they'll sell it. They'll buy back in at a loss in their position if they were shorting, and that just naturally just it's a cascading effect where the price just continues to go up, right? Because now we're seeing more people buy and there's less supply, then the price is just naturally going to go up. So I'm really interested to see if that's part. I think it is part of the reason that we're seeing, maybe even retail get back into the game in some way. They'll maybe take a loss and then they'll just buy back into the asset itself. I do think that BlackRock has a good, you know, I think BlackRock's probably going to get these ETFs approved. I don't know when. I'm not going to, argue and play the game that retail's playing right now. So I understand why people are definitely getting into the market, but I definitely think that if BlackRock is, witnessing this right now, they probably would appreciate if the price did go down a good amount so that they can continue to accumulate. That's the bearish mindset, the thing that I'm keeping in the back of my head because why would they want to buy? Why would they want to buy it? 21 when they can arguably get it at let's say 1300, right? It makes more sense for the
Mm-hmm.
price to go down and to maybe even distribute some supply that they have at this level so that they know that the people who can't sustain this price level being held up for so long are the ones who are willing to capitulate when it does seem like sentiment is gonna, probably return to the downside when we wait for this correction.
Oh, and the same thing for someone like Saylor, right? Like I think it was every time it crossed 31 on the initial run up of Bitcoin, he
Mhm.
was back in profit, and it wasn't a small number profit, right? It was like every $100 was another 60 million he was in profit. So a guy like that's probably like, hey, we can get one more dip before a massive leg up. I'm down to accumulate some more.
Absolutely. So yeah, that's all I really had on Ethereum. That's been really interesting to me. Again, I'm not like a huge ETH maxi. It doesn't really like I probably won't buy as much as I would other assets come the next bull run. It's not something that I'm just going to hold a huge bag of. Definitely have some exposure to it, but I think it's really interesting to see how excited sentiment has gotten recently over these ETFs. While nothing has been approved, I'm really cautious though going forward because I do think this is a buy the rumor, sell the news event. Remains to be seen once we do get any word from our boy Gary Gensler, which everyone loves to hate that man.
Well,
So
so I heard an interesting theory, and you reminded me of by saying you're not an ETH maxi, and it was right after Solana had ripped to 45, Bitcoin had gone up, and ETH was still staying around like the 1800 range. And someone's theory as to why it was, I can't remember who, but they were saying right now, like in this cycle, ETH is acting as the transaction layer, right? Like everyone
mhm.
that's been bag holding SOL since it fell from the 200s has just been buying and accumulating. Same thing with Bitcoin. No one's really spending Bitcoin, and there isn't really much to spend it on even still. Whereas with ETH, you've got a lot of people experimenting, running smart contracts, taking protocol fees, and so a lot of people are using ETH and its layer twos more as transactional rather than just holding and staking or whatever that might be.
That's actually really interesting. I think that also, I mean, that makes more sense too. Well, like out of all the blockchains, that would be the one that would be, the transactional one. Yeah, that's a really interesting point. And again, that means why we're seeing buying and selling. Obviously, people aren't necessarily accumulating, like you said, with Solana. I also don't think ETH went to a level where it was, a great level to accumulate. It went down pretty good. I think it was at like
Mm-hmm.
800 at one point, at the bottom. But we've seen definitely more diminishing returns for a lot of these altcoins. So it makes more sense to be accumulating those when they were extremely dirt cheap. So that's a good point. Let's see what else we got today. We can keep it in crypto. We can talk about Justin Sun's exchange. Um, very highly contested as to what actually happened. I think you and I both have different theories on it. Me probably a bit more skeptical, but I definitely like your idea because we have to pretty much assess, we don't know exactly what happened. We have to kind of gauge and see what the possible outcomes are. And you made a really good point with what happened with Hobie earlier in this year. So if you wanted to dive into that, and then I'll just tell you what mine is, which is comes to fraud. But
Yeah, absolutely. So, for those who hadn't seen the headlines or haven't read the article, Poloniex, which is a Justin Sun affiliated exchange that he has stake in, was hacked. Estimated loss around 114 million, combination of Bitcoin, ETH stables, and then was all converted to either Ethereum or Tron and dispersed from there. Um, and it was flagged last night, I think, if you're in Eastern time, or it would have been early in the morning in Asia where her son is. And yeah, they ended up disabling the wallet, but not before they lost a bunch of money. So my theory is we already had Huobi, now HTX, hacked earlier in the year, and we saw a similar response. Justin Sun reached out and said, "Hey, if you want to take this as a white hat and get back the money, we'll give you X amount as a fee, and we'd also like to hire you as a security consultant and advisor." Um, and so my kind of theory is someone saw that, or it's the same guy, or it's someone who just hates Justin Sun, and they're like, "Hey, this dude's messing with my bags. I'm tired of it. Cut the shit. I'm going to mess with his bags." But honestly, no, I see it as a win-win for the hacker. Honestly, I mean, it's not me going out and saying, "Hey, go hack some stuff," because that's not cool, not fun. Um, but no, you get to walk away with. I think he was offered like 5% or 8% of 114 million, and also a job as an advisor at Poloniex for security. It's like whether or not I like Justin Sun, hey, you get a job offer and million bucks.
Yeah, I mean, it's not a bad deal at all. And even if it was an inside job, well, he walked off with what, $100 million worth of assets? Not too bad. And again, will they go to the authorities if that's the case? Who knows? But yeah, I'm probably a little bit more skeptical when it comes to this, probably just because of how deep I am into I call it tethered fraud because I think that's what everyone on Twitter calls it. But there's definitely some type of ring between these exchanges where they're just going back and forth. I've gone ad nauseum about it, but yeah, I think it's really interesting, and it's really interesting also because we're seeing a bit of a pickup when it comes to exchanges and some of these banks being hit with hackers or ransomware to some extent. We saw that the Chinese bank ICBC got hit with a ransomware attack. I believe it's a Russian group that they were accusing, BitLord or not BitLord, Bit something. I'll get it in a second and pull it up. But let me just pull up the article real quick. Pretty much it affected US Treasuries being traded. And the reason I bring this up is because I think that there is something behind a lot of these attacks that we're starting to see. It seems like a really good, we know that a lot of these banks are necessarily insolvent in some degree, right? We just haven't seen a run on any of them to prove that they are insolvent. We do know that there's a lot of issues in China's banking. There's banking and also real estate markets. So I'm really interested in see how this is going to play out over there. We do know that Chinese banks had to raise funds after a cash crunch spooked their market, and some of the financial firms had to pay 50% overnight rates last week for when it happened. So it's really interesting to see how the money is drying up in China. And we're also, and again, that goes with global markets. The M2 money supply in the U.S. is dropping significantly as well. But yeah, these ransomware attacks and these greater attacks that we're seeing from hackers, and it doesn't even have to be on like these large banks. We're just starting to see like these exchanges and financial institutions being hit with these. They're becoming the targets of these hackers. I think that there is something to this, to a greater narrative that we have to keep in mind. I'm not saying necessarily we're going to see this in the United States or something. I do think that it is going to be a play that maybe drives a narrative as to why some banks do fail, or there's going to be some type of issue with people not necessarily being able to access their funds. We saw that Bank of America, JP Morgan, I think Wells Fargo last week, and Truist as well, were having issues with ACH transfers and withdrawals. We also know that there were some banks, this week where they just weren't direct deposits weren't going through. So it's really interesting to see how we're having a lot of these issues in the banking system here in the United States. We're seeing a lot of these issues also in Asia. I think it's not long before we start to see maybe some of these headlines say, some of these bigger institutions, like, I'm not saying which ones are going to get hit, but definitely an interesting what was I going to say? Interesting perspective, because I think a lot of people do think that, whether we go into World War III or not, I think that remains to be seen. But I think that if we are going to see some type of attacks, it's mostly going to be in cyber warfare as opposed to anything physical for the time being. And if that's the case, that could also launch us into other heated battles. I think the U.S. and China still remains extremely tense back and forth. I think a lot of what we're doing right now in crypto, trying to eliminate Chinese exposure in the U.S. markets. We're trying to put sanctions on iFinex, which that's Tether and Bitfinex, those exchanges. If that's the case, then we start seeing lawmakers push forward with this. I wouldn't be surprised if we do start to see some of these attacks as a retaliation move.
Yeah, no, and I think two other takeaways to add just from the ICBC news is BNY Mellon is now disconnected from ICBC. They said they're going to remain disconnected until they get advice or just proof from someone else that it's completely safe. And that's huge just because BNY is the largest custodial bank in the world, right? So yeah, you definitely want to have that link. And then that just speaks towards Chinese American financial relations, right? Getting money back and forth. And ICBC, as far as I'm aware, I believe they're the only Chinese bank that has a US securities license. So it also not only can money not flow between BNY and ICBC, but also Chinese individuals looking to buy US based securities, no access right there until ICBC gets resolved.
Yeah, absolutely. And again, I think the other thing that maybe is going, unnoticed here is it's affecting the US Treasury market, right? Which is that's the baby right now in this in the US, the government's main focus. They're trying to save the Treasury market. There's a reason why yields keep going higher. It's because not necessarily people are buying US debt. We're seeing a lot of these other Asian countries, Japan and China, also offload it at pretty record numbers. Are they going to let this continue to be something that they're going to attack, right? They can't take much more before they have to do a short squeeze, and eventually that would cause equities to drop significantly because yields are just so significant that it makes more sense not to have your money in the market where it's really expensive for equities. And these treasury yields, guaranteed willing that you'll get your yield back and you get your money back. I mean, it's a pretty safe exchange on that part. So I'm really interested to see how the US Treasury market continues to act and how this is pretty much in some ways a weapon against the US, and see how they react to that. Because I definitely think that the Treasury market, more than anything, is the most important asset class right now when it comes to the US government, what they're most focused on.
Yeah, I mean, especially you saw for months on end US based institutions buying up bonds and absorbing corporate debt while Jay Powell was telling them, don't do this, don't do this, don't do this.
Yep.
So yeah, I mean, it could just be another warning sign that looking back on it, it's like, wow, if we would have listened to Jay Powell, maybe we wouldn't have gotten bit in the ass. But ultimately, we'll need to see an end result to really make the call on that one.
Yeah, definitely. I just think there's so much going on again that's not hitting the headlines. I think a lot of these
Mhm.
smaller news headlines that we're finding are part of a greater narrative that we need to be, at least keeping our eyes open to, remain vigilant on, right? I do think that, obviously we've had conflicts in Russia. We've had conflicts now in the Middle East, and it seems like Iran is kind of the main target in that respect, right? I'm interested to see when the China narrative does come in, and how does a lot of what's going on right now impact our involvement in some type of, I don't know, whether it's a trade war or some type of standoff that's going to definitely complicate things. Eventually, the market is in the U.S. is going to get hit. We see that it's slowing down in China. Eventually, it's going to bleed over into the U.S. It's just a matter of time, and it's also just a matter of the narrative. Like, when can they make it fit where it's plausible that, hey, we can get away with this financial collapse that we kind of orchestrated, but at the same time we definitely need to keep the public in good graces and in good faith with the government, that we have the ability and the right to rightfully govern a nation, and people still believe in the system. So that's one thing that's really interesting to me. I'm just trying to find what narrative it is. It's part of the game. I don't necessarily upset in either direction. It's just a matter of seeing what's going to stick when it comes to when the markets do finally drop. All right, let's go to what we're looking ahead to next week. I think there's some really important stuff, and I think that volatility is going to pick up. The VIX has been kind of average today. It's down a little bit, I believe, last time I checked. Yeah, it's down about 6.15%. That's pretty light compared to how much it's been down recently. So I'll take that with a grain of salt. But if we look at the U.S. major economic reports on Market Watch, we come down to next week. We could see that, actually, I'm down at this week right now. Next week, we have some really important data. Monday, nothing too much other than the monthly U.S. federal budget. This is definitely going to play into an effect with the U.S. budget resolution that has to be done by, I think, Friday, November 17th at 11:59 p.m. Eastern Standard Time. So it'll be interesting to see how that plays out if they come down to the wire. For that, I think that whole situation really does come down to U.S. credit and how that's going to be impacted by their decision and the timeliness of getting that resolved. So that's going to be something that's really important that I would definitely be keeping an eye on. We have CPI as well next week. That comes out Tuesday, and that's right before OPEX, which I think OPEX is going to definitely play into how the markets shift, especially how overbought we are. It can go in either direction. We could squeeze a little bit higher to the point where markets are like, okay, let's grow all these positions that were in the money. Now they're out of the money. Or it can be the exact same to the downside. A lot of people who are in profit, maybe they start getting cut because people are taking profit, and they're forced to take profit as well, close those positions. Leads to more selling into those assets in that case too. Wednesday, we have producer price index, core PPI. PPI is obviously something that not necessarily a ton of people are interested in. I think it's really important. I also think that a lot of these manufacturing surveys that we're getting this week or next week are going to be really important. Empire State I think that's important. I think the the Fed manufacturing survey is going to be the important one. And again, we talk about manufacturing all the time because if there's not demand, then they can't necessarily produce as much. They're just kind of working on their backlogs of whatever they have left to produce. And then once they run through that, well, they don't necessarily need any more employees to pay to do nothing. And in that case, we'd start to see unemployment continue to rise in the following months. So manufacturing is always going to be important. And then we can see that later in the week, we do have, a couple of Fed speakers speaking. Wow, that's a hard one to say. But later in the week, it's not too much. I think a lot of the price action, if we do see anything happen next week, it's going to come post Wednesday, right? I think Tuesday and Monday are going to be somewhat similar to what we're seeing today, back and forth in this range. I think later in the week is when there's not a lot happening, that we can definitely see the markets move significantly in one direction or the other.
Yeah, no, I think that's good stuff. And then maybe we could also, beginning of next week, cover the IRS dropped some new Social Security requirements, push back retirement age, and look like we got some nice tax bumps as well.
Nice.
So we could run through some of that and figure out how fucked we are next year.
They came out this morning, right?
Yeah, I think it was like yesterday night, early this morning.
Yeah, I saw something about it on Twitter, and I was like, oh, fuck, I can't wait to not read that. But yeah, that's definitely going to be something important, especially when we come to trading, because the IRS and the federal government does not give any leniency when it comes to traders, especially in the short term. Long-term investors, you guys have it pretty made. You get to keep 80% of your assets when you sell them, the capital gains. But short-term traders, no, it's a whole can of worms. I'm sure is even worse now. But yeah, that's pretty much what I had for the dates coming up next week. Let's take a look at the weekly close just as we wrap up this week. I just want to look at TradFi and kind of line up what's going on over there with what's going to be happening next week. You can see the S&P right over here is up 63 points on the day. We're at 44.10. So we broke through the 44 level, right? I'm not discounting this bounce whatsoever. You can see right here in the hourly, it's just been nonstop to the upside. You go to the daily, you can see that we're pretty maxed out at the top. We're at 98 on the stochastic RSI. We completely filled this gap down right here. We had a little bit more that we didn't fill back in October of 2023. We've fully filled that gap. And now, as long as we don't create any more gaps to the upside or to the downside on the way down, we should anticipate that these gaps are the next ones to be filled, right? I mean, this was such a small bit of liquidity that was sitting here that it got filled. I mean, that probably gives you a pretty good sense that we're probably going to see this come to the downside at some point. Question is it going to happen before or after OPEX? I'm going to say that's probably going to happen after options expire, after we get the CPI data, after we get the PPI and all that stuff. Just seems like that's the way the market's going to be, kind of fool people and maybe even just trade in this range right now. Because, I mean, yeah, we're up a lot from the bottom. Right? If we look at this, if we're down from here to where we currently are, we're up roughly 7.48%. From the top of the July move, we're still down roughly, let's say, still down about 4.29%. So, I mean, it's a pretty good move. And again, the reason why we say zoom out is because if we look at this on the weekly, yeah, we've had a really good move there. We could say that this is, I don't even know. I mean, this could be even a massive, if I want to be an asshole, I can say this is wave one, this is wave two. And these are, everything that's happened in between here are sub waves of these massive waves. And then eventually we get to this. But I think a lot of people right now are just waiting to see if it's this move that we're expecting or if it's this move where it's an A, B, C, and it continues to go higher. It's one or the other. We haven't got confirmation of that yet. We need to see how this plays out over the coming days to weeks and then eventually make an assessment from that. But I'm not necessarily getting too ahead of myself when I see this. Again, we were below the 50 moving average on the weekly. We bounced above it, and we almost got our death cross because we're way below the 200, which eventually would have hit. We haven't hit it yet. But I do think that since these gaps are below the 50 moving average, we're probably going to get to death cross. It just was delayed by, us pumping into it. Same thing with the NASDAQ. NASDAQ is breaking out of this parallel channel to the downside. Is that normal? Yeah, absolutely. Putting in lower lows and lower highs. It didn't seem like a parallel channel based off where we were in September. However, back in October 27th of last month, we see that it went right down to the second trend line. just bounced right off it and we got that pump to the upside. But again, we have these gaps, so we're probably going to be back in this channel eventually, or we're going to form some new type of parallel channel or some new type of structure. But that's up 2.19% today. So we're definitely seeing a lot of people go long into the weekend. I don't know how these positions will hold up come the next 30 minutes. I don't necessarily think that too much is going to change. You're probably still going to be up at least a percentage or 1.5% in some of those indices. Up 380 points right now in the Dow. A lot of gaps to the downside. We got the death cross followed by a golden cross. So there's a lot of optimism, I think, in this market right now. And we're seeing volatility being crushed significantly. The dollar has been down a good amount, right? Still above the key level of support, but it hasn't necessarily picked up. I mean, even if we look at gold has been eating shit recently, right? It almost looks like the oil chart, how much it's been going down. So I think a lot of people are getting risk on again, which it seems like in the short term. I don't know how long this lasts, but I do think that we are building the sentiment that is perfect for a market rug pull or correction. And I definitely don't expect this market to continue to go up forever based off of what we are seeing in the data. And I mean the data of unemployment continue to rise, money is contracting in the M2 supply. Rates are still elevated. We're seeing the yield curve uninvert, revert back towards zero, which, historically does lead to a period of recession in the following weeks to months. So when this does hit, I think that right now, post OPEX is probably going to be the best period because now we're in this kind of lull between election year and election year to the point where, okay, it makes more sense for the market to drop now and then kind of rally into the election. That's the case. Maybe that's just me thinking outside the box there, but we do know that most of these massive corrections that we do see in the markets do come in election years. So the idea of that's, maybe we don't necessarily see something till, post 2024, we can kind of throw that out the window, right? 2000, that was George Bush and Al Gore. We got 2008, that was McCain and Obama. I mean, 2024, I don't know who's going to be the two top contenders. I don't care necessarily at this point until we get a lot closer to it. But I do think that the idea of no election year dump is, well, it's clearly can be proven wrong in those two cases.
Yeah, no, I'm kind of in the same boat as you for the election. The way it's shaping up right now, I don't really not.
Yeah, man. I also just don't care because again, this for me, I feel like it's just about playing this game, following the narratives, and seeing where there's value. I feel like a lot of even my positions personally now, I'm okay with not making money in the short term because I just genuinely have the conviction and the belief that we are going to see something that people aren't anticipating. And these rallies where we see these massive smelting candles like we're seeing in crypto and also in TradFi, absolutely insane. And just to wrap up the week on this last name, because Jweb's not here, so he can't beat me up for bringing this up. I have to pull up the USDC chart once again because I'm really interested to see how this plays out towards the end of the week. USD's market cap continues to bleed out. We're literally sitting at $250 million, almost $252 million down, 1.04% again today. We're sitting on $24 billion market cap of an asset that was once worth $57 billion and has just been bleeding out like crazy, right? So if we look at this on the weekly, I mean, you got a massive gap up there. I don't think that's going to be filled. I'm sorry. That's that's a lot of money that's going to have to come in and save some ass in that regard. But we do have a gap that's down here between 20.5 billion and roughly 14.7 billion. I don't necessarily think that these gaps mean a whole lot when it comes to these stable coins and their market caps, but it definitely seems like someone is pushing this price down significantly. They're taking profit. Seems like this is the one backed stable coin where that it's 1-to-1 because of how much they report on their reserves and how it's, every quarter you're getting those reports from Circle. But I think this is a really scary chart. This is probably my favorite chart right now to be watching because it's every day. It's nonstop, right? How many red weeks can you see here how many are green significantly to the upside, how many are green to the downside, and continue to be red regardless of stochastic RSI and all that stuff. I mean, we just look at this, it's just nonstop, selling at this point. We got another gap here today on the daily. It closed it opened up way lower than people were anticipating. It was 24.07, and we're currently at 24.00 or 01 right now, 249 million down. And if we compare this to USDT, once again, not going to give you too much tether FUD today, but it's up 224 million, which is arguably this inverse of what we just saw in the USDC chart. So exchanges are scary right now. Stable coins are scary. This market is scary, especially when you just get this max euphoria. It's something you just need to keep in mind. Short-term thinking doesn't always play out the way most people want it. A lot of the times it just changes on you when you least expect it. It's just kind of what you got to keep in mind going into next week and the week after and the week after and the week after, right? So until it happens, anything is possible and we continue to see pumps. Yeah, absolutely. But we still anticipate a 40% drop to 60% drop for Bitcoin at least going into the halving. And, I don't think if we're going to be bullish on the halving, then I think we have to play with, how history is repeated each and every time. It's exactly what's happened. So just keep that in mind going forward in the crypto and even TradFi, right? 3 green weeks or a couple green weeks don't make a market.
Yeah, no, sound advice. I've got really nothing left. It's Friday, long week at work. My mind's empty, but I did think of it. I was looking, I was like, man, this beard's longer than I thought. And then I was like, well, wait, well, Jweb shaved his, so it works that I have one now. Gotta keep some facial hair on the show.
Yeah, dude, we're the two men. We got the facial hair now. Jweb's the baby. No, I'm just kidding. Jweb, we love you. We miss you. I hope you're doing well today. But yeah, I think we're gonna wrap it up there. I'm dead tired. I haven't slept in 32 hours. I've been up nonstop. So I'm ready to go take a nap. I hope everyone has a great weekend. Just before you head out, make sure you give us a thumbs up, a like, comment, subscribe, all that fun stuff. Send it to, your best friend, send it to your financial advisor so they can make fun of us, or, send it to your girls, Girl Scout leader. Teach them kids about, economics and how they could maximize their potential selling Girl Scout cookies and all that fun stuff. We'll be back Monday. Probably Jweb and me. House, we got to have you back on soon. We appreciate having you and all the help you've been giving us. And plus, you just have brilliant minds, and we love to pick it every single time we're on this show. So that'll pretty much wrap everything up today. Hope to see you guys next week. Take care and have a great weekend.